Money tip. These are 5 things to consider before you lend your friend your hard-earned money. Number one, why are they borrowing from you instead of borrowing from a circle, from a bank, from a financial institution, or even from mobile loan apps where they can get 2,000 or 3,000? Have you asked yourself that question? Because most people, before they borrow their friend, they have exhausted these means from financial institutions. So it is a critical question to ask yourself, why have they come to borrow from you instead of borrowing from the financial institutions? Number two, what are they going to use the money for? Some people come running to you to borrow money just to finance their lifestyle. They are probably paying school fees, they are paying rent, they are paying a loan they had borrowed at Shylock. Basically, they are borrowing from you to maintain their lifestyle instead of putting financial discipline into their lives. And you lend them your money to sustain their lifestyle. Ask yourself, what are they going to use the money they are coming to borrow you for? Number three, how are they going to pay back that money? If someone has already exhausted all the means of borrowing money, for example, from a bank or from a financial institution, and they have come to borrow you, how magic are they going to work in their budget so that they are able to pay you the money they have borrowed? Other people will come with lofty ideas of how they are going to start a business with the money you've given them, and when the business does well, they'll pay you back. But have you considered what would happen if the business collapses? What would happen if the business doesn't do as well as they have projected? How will they pay back your money? You must answer that question before you lend your friend your money. Number four, what will happen if they don't pay you back your money? Banks and other financial institutions have means and structures to get back their money if the people who have borrowed from them don't pay back. You don't have the structures to go after people who have borrowed you money and defaulted. And then, are you willing to lose that money that you have lent your friend? A bank is willing to lose 100,000 because they have provisions. You are probably not in a position to lose 100,000 shillings that you are lending your friend. So consider what would happen if your friend doesn't pay you back the money. Number five, what form of evidence are you going to have when you give your friend the money? Are you going to sign an agreement? How are you going to transfer the money to them? Be cautious, never give money as a loan in cash because there will be no evidence of money flowing. Always sign an agreement, always transfer money through electronic means so that there is a paper trail of money. These are 5 factors you need to consider before you lend your friend your hard-earned money. And as a bonus, when you lend your friend money, you need to consider what rate of return you're going to get vis-a-vis the risk you're taking. You need to charge an interest rate that will be commensurate to the risk that you are putting up. For example, it is not worth to lend your friend 100,000 shillings and after 6 months they only give you 5,000 shillings in interest. You are better off putting that money in treasury bills or treasury bonds, which will give you the same or more interest rate. You need to charge a premium for the risk that you're taking to lend your friend the money.